What's up, traders? Today we're going to talk about the proper way to buy in the money leaps to 3x, 4x, or even 5x your returns. And on top of that, we'll look at some potential trades that I'm eyeing currently. Now, if you're new to the channel, my name is Rashad. I am a full-time options trader and I bring in full-time income from the stock market. But go ahead and do me a huge favor and go ahead and smash that like button. That just helps push this video out to more people. And do remember that this is not financial advice, nor is it a recommendation to buy, sell, or hold any equities or options contracts. Now, y'all already know I am always going to start with a word from God that has to deal with money, wealth building, or business. And today's word comes from Proverbs 3:9, and it says, honor the Lord with your wealth, with the first fruits of all your crops. All right, so this verse is touching on tithing. Give 10% of your wealth back to the Lord because he's the one who gave it to you to begin with. And when you are obedient, he says that he will open up the windows of heaven so much so that there will not be room enough to receive. And I know how this has personally transformed my life from being obedient. However, when I sit back and think about it, the wealthiest people that I know personally are all givers. And it's pretty interesting to have that correlation. And so if you feel like you're not progressing towards where you want to be, then try something different to get a different result, because doing the same things over and over again, expecting a different result, is definitely insanity. And I know you're not insane. All right, but that's the word for the day. I hope that blesses somebody out there. And speaking of people who are absolutely receiving blessings, I have to shout out members of the Trade to Freedom community. Now, I have a huge amount of people that I need to shout out because obviously October just ended and everybody is posting all of their amazing gains for the month. But there is one person that just insanely knocked it out the park. And so I have to shout out Steven. And he says, hoping this inspires. I closed a few leaps that I put on in April for a few big gains. However, executed 100 trades, 87% wins, not a single red day, net P&L of $205,000. $205,000. We're talking about just for the month of October. All right, we're talking about the 31 days in October. This man made $205,000. He says options trading has been life-changing. Thank you, God, Rashad, and the community. And he posted his daily results here. And you can see it's just crazy. Like this, like we can see on October 10th, he did $31,000. On October 20th, he did nearly $78,000. And so these numbers are absolutely insane. And Steven actually just started trading options in April. All right, so he came into the community, he got down with the process, he started planting seeds, and now he is reaping his harvest. And he just keeps growing and growing, because I believe in September, he did a little over $100,000, and now he's doing over $200,000 just 1 month later. And all while this is while he still has a 9-to-5 job. And so had some discussions with him, and let's just say he's pushing up that retirement date. All right, so Steven, shout out to you for an amazing month. He got really, really close to what our record is in the community. Our current record is 229,000 for any community member, and he did around 205, 206. So Steven, we'll see if you can capture that amount in November. All right, now, of course, these are amazing results, and results do vary. However, if you would like to join an amazing community, come and join us in Trade to Freedom. The link is below in the description, but not only will you get access to my actual trades as soon as I enter them, you'll have access to my entire options framework via the Trade to Freedom course. You'll be able to ask me questions at any given time, and lastly, you'll be within a community of other traders who all have the exact same goal. And so if that is you, then come join us. The link is below in the description, but if not, send the link to somebody who needs it. But without further ado, let's get down to business. All right, now looking at the S&P 500, we are still around the all-time highs. Now, what a lot of people think is that this bull run is worn out, and they believe that we are due for a crash or a pullback or something of that sort here in the very near-term future. Now, what I will say is that nobody can accurately predict what exactly the stock market will do in very short-term durations. However, what we can do is we can look at data to give us a better sense of what it could possibly do so that we can plant our seeds so we can reap our harvest here in the future. Now, we are now heading into November, which is historically the best month of the year for stock market returns. However, if we look at the data, November is just the beginning of great things. Let's take a look. Now, looking at this data from Carson Research, we can see it says the best 6 months of the year are here. And we can see that the 6-month period from November to April averages about 7% gains during that 6 months, and the stock market is higher in April than it was in November 76% of the time. All right. The fourth quarter of the year is historically the best quarter of the year, and the second best quarter is historically the first quarter of the year. And so we have now just entered into that 6-month period where a lot of gains are captured. And you might say, well, yeah, Rashad, but the market has gone up so much this year, there's no way that it can continue going up even more. Well, let's look at the data. This graphic shows S&P 500 returns after the 10 strongest May through October returns since 1950. And we can see out of these 10 years, it was higher 90% of the time. And the only time that it was not was the period from November of 2024 to April of 2025 this year. And we know why that was. We had all the tariff drama in March and April that just literally crashed the market. Now, if it wasn't for the tariff stuff, then it absolutely would have been higher, right? So it would have been 100% of the time, but that did happen. So we have been higher 90% of the time after huge gains earlier in the year. And here's another clue that we could finish the year extremely amazing. All right, so this chart now shows us S&P 500 returns after the market has gone up 15% through October. And we can see, just jumping down here to the bottom, that the market has been higher 95.2% of the time, with the only time it was not higher was in 1986, where it was down by less than 1%. All right, and on average, for the years where it has gone up throughout October, the market is up 4.7% by the end of April. And so I know that it seems like the market has gone up so much and there's absolutely no way that it could continue going in that same direction. However, what you do not want to do is sit on the sidelines and not have your seeds planted, because you could absolutely be missing out on your harvest. And leaps are an amazing way to get amazing returns on companies that you really, really like. And so let's look at some of my rules when it comes to buying leaps. The first rule, and probably the most important rule, is you need to buy or use this trading strategy on a quality company. All right. It must be a profitable company with strong fundamentals. And this will reduce your risk and increase confidence in long-term growth. Now, listen, I know we all see these high-flying stocks that get a bunch of hype, but the bottom line is, if the company does not make money, all right, they do not have any net income, what you should always think of it as is, would I buy this company in real life? All right. If I was looking to go buy a coffee shop, and I looked at the company's financials, and the coffee shop did not make a single dollar throughout the entire year, and not only that, they actually lost money, would you buy that company in real life? And if the answer is no, then you probably shouldn't be buying shares or buying leaps of that company either. Just wait, give it some time, allow the company to prove themselves to you before you put your money where your mouth is. All right, so that's rule number one, is we want to buy quality companies who are actually making money, because fundamentals tell you what to buy. However, technicals will tell you when to buy. And so our second thing is, we want the stochastic to be pointing upwards. And the stochastic is just a momentum oscillator. So quite simply, if it is pointing upwards, that means the stock has upward momentum. And if it is pointing downwards, that means the stock has downward momentum. And so I will show you that in just a moment. But that is the second thing, is I want for the stochastic to be pointing upwards, which means we now have upwards momentum. And preferably, I would like to get in after a sell-off. All right. And so number three is long-term expiration. The option must have 365 days or more until expiration. If you are doing like 5 days out, you are essentially just buying a lottery ticket. And this is what most traders do. And this is why most traders actually lose money, because they are not giving themselves the highest probability of profit. So that is number three. And then number four is, we want the delta to be between a 0.70 to a 0.80. And this ensures a high correlation with stock movement and faster gains. All right. And this is something else that gives us a higher probability of profit, because we are selecting strikes that are already in the money. And so let's go ahead and take a look at a few examples to see how this will work out. All right, so let's go ahead and take a look at Salesforce. We within the Trader Freedom community entered into leaps on Salesforce a few weeks ago, and they are doing amazingly well. And so I will show you what I looked at and what made me pull the trigger. Now, first things first, remember our rule number one is we want to do this on good companies. And so looking at the fundamentals of Salesforce, We can see first off, it is a $247 billion company. And as of right now, they do about $38 billion per year in revenue and about $6 billion in net income. All right. So they do know how to make tons and tons of money. And we can see that their trailing 12-month PE is 30. And so that is a good number. We know that they are not grossly overpriced. And if you're not familiar with Salesforce, they are basically the largest CRM, which stands for Customer Relationship Management software, pretty much in the world. Now, throughout this year, their price has been coming down because people think that AI was going to basically destroy their business, right? Which is why it's come down to a PE of 30 and even a price to cash flow of 18. And just recently, they had their last earnings, and they show that not only is AI not killing their business, but they are actually making more money due to AI. So when they had their earnings, they beat on revenue, they beat on earnings. And then not only that, they actually raised their guidance for not only the following quarter, but years moving forward. And so when a company raises their guidance, it's basically them saying, hey, the money we thought we were going to make before, scratch that. We're going to make even more than that. All right. So they are absolutely using AI to their advantage. So let's go ahead and take a look at the chart. Now, here we are looking at the daily chart. However, what I like to look at when I am looking for leaps is I like to look at the weekly chart. So I'll go ahead and switch these candles from daily to weekly. Now, when it comes to technicals, what did I say I wanted to see? I wanted the stochastic to be pointing in an upwards direction. Why? Because that lets me know that the stock has upward momentum. Okay, so for the stochastic, down here, anything below 20 is considered oversold, and anything 80 or above is considered overbought. And so we in the Trader Freedom community caught it right here. And so we entered a few weeks ago on this candle here, right when the stochastic started pointing in an upwards direction. But let's go ahead and open up the options chain to look at how we would potentially enter into a trade if we were entering into it today. All right, so here we are at the options chain, and the first thing we need to do is select our expiration date. Now, remember, we need a expiration date that is 365 days out or more. And so in order to actually give you the highest probability of profit, you should really go to the furthest expiration date. Now, the trade-off with that is the further out you go, the more the contract costs. And so it's up to you on how far you want to go out. However, the minimum is 365 days for it to be considered a LEAPS contract. And so let's say we just want to go just a little further out than 365 days. Well, we would come here to this date that is 412 days out from now, with this expiration of December 2026. So I'll go ahead and I'll select that. And now what we need to do is select our strike price. Right now, here's what you do not want to do. And here's what most traders will do. Well, first off, they'll select an expiration date that is way too close. But then secondly, they'll select a strike price that is down here way out of the money. And they go out here and they're basically like buying a lottery ticket, because they just want to buy a very, very cheap contract and just hope it explodes so they get thousands of % returns. And while that could happen, the majority of the time you are just losing out on your money. All right, so what you want to do is you want to come in the money somewhere down here at anywhere between a 0.70 to 0.80 delta. And so that will put us anywhere between this $230 strike to about this $210 strike. And so for the purposes of this video, let's just go right there in the middle and we'll do this $220 strike. Now, if I go ahead and click, then we can see at the mid price, I will be paying $6,880 for this contract. Now, if we come over here to the P&L curve, all right, so we can see Salesforce is right here at $260. And if we look at these two numbers up here, we can see on the left, it shows us how much the contract will be worth at expiration. And then on the right, it shows us the current P&L. All right, how much the contract would be worth today based on the price of the stock. So of course, this is a bullish strategy, right? You would only do this if you believe a stock is going up. So if we continuously move up on the stock price, we can see how our profits will continue to go up and up and up. And the higher the stock price goes, the more and more money we'll make. And so let's just say it rises to about $300. So now we're at $300 and we can see the profits that we would have. Now, this is off of just one contract. So if you're doing more, then obviously just multiply it. But the higher the stock price goes, then the more and more money that we will make. Now, looking over here at some of these ratings, we can see that analysts have it at about $315, $315, $312. It looks like one has it at $430. And so if we were to come up here and look around that $315 mark, all right, it would just depend on when it hits that stock price. All right, because if it's 412 days out from now around expiration, then we'll make about $2,597 per contract. However, if it does closer to current times, then you can see we'll make about $4,485 per contract. All right, and let's see, one analyst has it at 430, so let's go up there. And if it were to go all the way to $430, then we can see right here that we'll make anywhere between $14,000 and $15,000 per contract. All right. And so that is the power in buying leaps, is that you get the power of 100 shares while spending a whole lot less. And so for this leaps contract, we paid $6,877. However, if we were to have bought 100 shares of CRM at $220, then that would have been $22,000. So we're literally paying about a fourth of the price. Okay. And so that is on the upside. Now, of course, this is a bullish strategy. And so your biggest fear would be if the stock price were to go down and remain down, right? Because we can see as the stock price goes down, then we make less and less money, and then it gets bottomed out at whatever price we paid for the contract. All right, whatever price you pay for the contract is the most that you could lose in this situation. All right, but we would never allow that to happen. Since we did enter in by the stochastic, then you can use the stochastic as a way to exit as well. All right, so whenever that stochastic starts turning downwards again, and I'm talking about the weekly stochastic, not the daily, but whenever that stochastic starts to point downwards again, then you can go ahead and think about exiting the trade. All right, and so that is a leaps contract on CRM. And if you want to get a little fancy, then you can always turn this into like a poor man's covered call and collect some premium on the upside as well while you're waiting around for the stock to continue to increase in price. And so if we were to go back to the options chain, what you could do here is, now that we already have our leaps contracts, right? We're already buying this contract. Well, what we can do is we could sell a shorter dated call and collect some premium from that as well. And so from here, I want to follow my basic rules. And normally I'll go about 45 days out. And I see that there is a monthly expiration that is 48 days out from now. And so let me go ahead and select that. And from here, maybe I'll select a delta of around 0.20. And we can see that this $300 mark has a delta of 0.21. And we can see that the expected move is plus or minus $28. And so while the stock price is currently $260, if we were to add 28 to that, it'll get us around $288. And so $300 could be a safe mark for us to just collect the premium while the stock price slowly increases. And so we can see at this $300 strike, we can collect anywhere from $470 to $495 for agreeing to sell these shares at that price. All right. And so I'll go ahead and click that, and we will add that to the order. So now if we look at the P&L curve, now we can see it looks a little different. So now our hope is that the stock price just slowly increases, but does not bypass that $300 mark by the expiration date, which is 41 days out from now. All right, and so we can see as the stock price slowly increases, it will keep increasing all the way up to our short strike, which is at $300. But once we are there, we are maxed out at our profits. So we can see how much we would make per contract if it hits this amount around expiration, which would be $3,434. However, if it were to reach this amount in the near term future, we can see the current P&L shows $1,728 per contract. All right. But if it goes ahead and bypasses this, then you'll see the profits start to go down more and more slowly because of that short strike. All right. But in this situation, when this occurs, I typically just go ahead and close both contracts for whatever profit it is worth at that time, because we can always buy more leaps on a company as long as we still believe in that company and believe that it's going up. And the data that we look at still shows it as a buying opportunity. All right, so that is CRM. Now let's quickly look at a few other stocks. Now, another stock that we know is a great fundamental company. However, they are now currently in a nice little pullback and could be a great leaps opportunity here very shortly is Meta, ticker symbol META. And so, of course, recently Meta had earnings, and there was two things that investors really did not like. One, they had a huge, large one-time tax bill due to the big, beautiful bill that drastically reduced their net income for the quarter. However, for me personally, because it is a one-time thing, I don't think it's that much of a big deal. All right, so there was that. And then also they increased their capital expenditures, basically saying they are going to continue to spend more and more on AI, and investors were not happy about that. All right, so we got a huge sell-off this week, as we can see here. So the high of the week was $759, and it dropped all the way down to $645 at the low. And so about a 12% price drop for Meta within 1 week. And so this could possibly have created a very amazing opportunity. Now coming down here, looking at the stochastic. Now the stochastic right now is kind of pointing a little bit sideways. Now the stochastic K is above the stochastic D, which is what I need to happen. However, I'll probably wait for a little better confirmation from the stochastic and allow it to start pointing up a little bit more than sideways. However, if you were to enter into a LEAPS contract right now, I wouldn't be mad at you. But what I'm doing right now is I'm actually selling puts on Meta while I wait around for the stochastic to give me a better signal. Now, looking at these news articles over here, we can see the ratings, and it looks like some analysts have the price target anywhere between $770 on the low to some have it as high as $1,117. So several months, even a year from now, this could be a home run opportunity that is sitting right in front of our faces. And so if we were to go ahead and load up an options contract just to see how much we could make if it got anywhere, let's say in between what analysts are putting the price target at. And so we had 770 all the way up to 1100. So let's go right there at 900, right in the middle, to see how much we could possibly make if we were to enter into a LEAPS contract today and it were to move up to around that $900 mark, which it was just at around $800 just a few months ago in August. So let's go ahead and take a look. We'll go ahead and look at the exact same date. That's 412 days out from now. And if we follow our rules, and we'll go to about a 0.75 delta, which will put us at a strike of 550. I'll go ahead and click that. Now, obviously these contracts will be a lot more expensive because Meta is a very expensive stock. It's a $600 and something stock right now. So of course the premiums are going to be higher. And so for one contract, we will be paying about $17,280. But if we come up here and we look at the P&L curve and the stock price were to go up at the midpoint of what analysts say it is currently worth, so I'll go up to about $900. Well, we can see by expiration, this one contract will be a profit of $18,283. And if it gets to that mark somewhere near the near-term future, then it will be around $22,000 of profit per contract. All right, so Meta is one to look forward to. And then a third one could be Netflix, ticker symbol NFLX. Now, Netflix has recently had a nice little sell-off. Investors also did not react very well to their earnings, but they just announced that they will be doing a 10-for-1 stock split that will be going into effect later this month. And so while stock splits do not increase the value of a company, however, what it does do is it decreases the stock price greatly and allows for regular traders like you and I to be able to invest and trade with it a lot more easily. All right, and that works out great when it comes to trading options. And so while right now it has a $1,118 stock price, it will be just over $100 come later this month. And so coming down here and looking at the stochastic, we can see that obviously the stochastic is pointing in a downward direction. And so I would be doing absolutely nothing with LEAPS right now until the stochastic were to start to move upwards. Now, statistics show that after a company announces a stock split, that the stock price tends to go in an upward direction leading up to the actual stock split and there shortly after. And so my assumption is that Netflix's stock price will continue to rise, which will allow the stochastic to start pointing upwards. And so I wouldn't be taking any action currently. However, when that does, we need to be ready. So I'm going to come up here and I'm going to look at the options chain. Now we'll take these prices with a grain of salt because here in a few weeks, the stock price will be 10 times less, which means these option premiums will likely be about 10 times less, which will be much cheaper for us in order for us to buy LEAPS. All right, so if we follow the exact same formula and use the exact same date, then I'll come down here and I'll click that and I'll scroll up here and do it in the money call right here around this 0.75 delta. All right, so I will be buying this $960 strike. And we can see, obviously, these are extreme prices, right? However, again, in a few weeks, these prices will be 10 times less. Okay, so for this $960 strike, if I click on this, we can see I will be paying at the mid price $27,900 for this contract. However, once the stock split happens, this will be the equivalent of buying the $96 call strike, and I would be paying about $2,790 for the contract, right? So that drastically changes things. So that is something to be prepared for. And I hope you learned a ton during this video. But if you would like to join us in this journey of building wealth, come join us in Trader Freedom. The link is below in the description. It's called Trader Freedom because I would love to help you do just that. But that's it for this video. I will see you guys on the next one. Peace.